If you want to build real wealth, you have to stop wasting your time chasing the latest get rich quick schemes. Forget the hype, forget the trends. Most people are focused on the wrong things: day trading, flashy NFTs, investment, or trying to time the market perfectly. These are distractions and they rarely lead to lasting financial freedom. Today, I'm going to break down 3 investments that actually build real wealth. Investments that, when done correctly, can grow your net worth steadily and reliably. And the best part, you don't need insider secrets or luck. You just need a smart investment discipline approach. Real estate is one of the most powerful tools for building long-term wealth. And the reason is simple: it allows you to leverage other people's money while generating predictable cash flow. Unlike stocks or cryptocurrencies, which can swing wildly in value overnight, real estate is a tangible asset that tends to appreciate over time. But the real magic comes when you combine leverage, rental income, and tax advantages. When most people think about investing in property, they immediately assume they need hundreds of thousands of dollars to get started. That's not true. With the right strategy, even a modest down payment can give you control over a significant asset. Take a $300,000 property, for example. With a 20% down payment, you're investing $60,000 of your own money investment, but you now own an asset worth $300,000. That's 5 times your initial investment working for you. Meanwhile, your tenants are effectively paying down your mortgage, covering expenses, and putting cash in your pocket every month. The cash flow is just one piece of the puzzle. Over time, the property appreciates in value. Historically, real estate in the US has appreciated about 3-5% per year. Investment at not including inflation adjustments. This means that even if you weren't collecting rent, your property would likely be worth more than what you paid for it a decade down the line. Investment. And when you combine appreciation with cash flow, your return on investment becomes incredibly powerful. You're not just earning money, you're creating a wealth building engine that compounds over time. Investment. Taxes also work in your favor. Real estate offers unique advantages like depreciation, which allows you to write off a portion of the property's value each year, and mortgage interest deductions, which can reduce taxable income. This means more of your money stays invested and working for you instead of going to Uncle Sam. And if you ever decide to sell, strategies like the 1031 exchange allow you to defer capital gains taxes by reinvesting the proceeds into another property. This creates a cycle where wealth is continuously compounded instead of diminished by taxes. Another benefit is stability. While markets fluctuate, people always need housing. This makes rental income one of the most reliable forms of passive cash flow. Even during economic downturns, demand for rentals tends to remain strong, providing a safety net that most other investments don't offer. Real estate is also scalable. Once you understand the fundamentals, financing, tenant management, and property selection, you can replicate the process multiple times. Each new property increases your cash flow and your net worth, creating a snowball effect that accelerates over the years. The key is discipline investment. Buy smart, manage efficiently, and resist the temptation to chase quick profits in speculative markets. Over time, investment. Real estate doesn't just build wealth, it creates financial freedom. Investing in dividend-paying stocks and index funds is one of the most reliable ways to build long-term wealth. Investment. And it all comes down to the power of compounding. When you invest in companies that pay dividends, investment, you're not just relying on price appreciation, you're also earning a steady stream of income that can be reinvested to buy even more shares. This reinvestment creates a snowball effect that grows exponentially over time, turning small, consistent contributions into substantial wealth. Many people underestimate how powerful this compounding effect can be. Imagine investing $500 per month in an S&P 500 index fund, which historically has returned about 7% annually after inflation. At first, your portfolio grows slowly, but over 10, 20, or 30 years, the growth accelerates dramatically. By the 30-year mark, your initial contributions might only account for a fraction of your total wealth. The majority comes from compounded returns and reinvested dividends. This is how ordinary investors who consistently put money aside end up building extraordinary financial security over decades. The beauty of dividend investing is its simplicity. You don't need to pick the next hot stock or try to time the market perfectly. Instead, you focus on quality companies with a history of paying dividends consistently. Or you invest in broad market index funds that capture the growth of the entire market. This reduces risk while still allowing your portfolio to grow substantially over time. The key is patience and consistency, investing regularly, reinvesting your dividends, and letting time do the work. Another advantage is that Dividends provide a form of passive income. Even if the stock market experiences volatility, dividend payments continue, giving you cash flow that can be reinvested or used to supplement your income. Over time, as your portfolio grows, these dividends can cover living expenses, fund new investments, or help you reach financial independence much faster than relying on savings alone. It's also worth noting that dividend-paying companies tend to be financially stable with strong balance sheets and steady earnings. This stability makes them less risky compared to speculative growth stocks that may rise or fall dramatically in a short period. By focusing on dividends, you're effectively investing in businesses that are profitable, sustainable, and built to last. Ultimately, investing in dividend stocks and index funds is about taking the long view. It's not about chasing hype or trying to make a quick buck. It's about building a portfolio that grows steadily, generating both wealth and financial security over time. With discipline, consistency, and patience, your money can start working for you, compounding quietly in the background while you focus on other areas of your life or investments. This is how ordinary people create extraordinary wealth, one smart consistent investment at a time. Investing in yourself is arguably the most powerful and often overlooked way to build wealth. While many people focus exclusively on stocks, real estate, or trendy assets, the truth is that the returns you get from improving your skills, knowledge, and abilities often far exceed any financial investment. When you invest in yourself, you're creating value that no market crash, inflation, or recession can take away. Your skills, experience, and mindset become compounding assets that grow over your lifetime. The first step in investing in yourself is education. This doesn't necessarily mean going back to school. It can be as simple as reading books, taking online courses, or learning a new skill that increases your earning potential. Think of it this way. Spending $30,000 on a high-quality course that teaches you a skill like digital marketing, coding, or sales could easily translate into $10,000 to $100,000 to $50,000 or even $100,000 in income over the next few years. That's a return on investment most stocks or properties can't match in such a short time. The key is to focus on skills that are in demand and provide leverage in the marketplace. Investment. Entrepreneurship is another crucial aspect of investing in yourself. Starting a business, side hustle, investment, or monetizing a unique skill allows you to control your income and create opportunities that scale far beyond what a traditional job can offer. Unlike a job where you trade time for money, a business lets you build systems that generate revenue even when you're not actively working. A single successful project or product can fund further investments in real estate, stocks, or other ventures, creating a self-reinforcing cycle of wealth. Networking and relationships are also investments in yourself. The people you surround yourself with can open doors, provide mentorship, and offer opportunities you would never access alone. Building meaningful relationships in your industry or community can accelerate your growth both personally and financially. The more knowledge, perspective, and connections you gain, the more opportunities you can seize. Mindset is equally important. Investing time in developing discipline, patience, and financial literacy ensures that when opportunities arise, you're ready to capitalize on them. Many people earn more than enough money, yet they fail to build wealth because they lack the skills to manage, invest, or scale it effectively. By cultivating a mindset focused on growth, learning, and smart decision-making, you position yourself to turn income into lasting wealth. Finally, investing in yourself is compounding in nature. Just as reinvested dividends grow exponentially, the knowledge, skills, and experience you accumulate over time amplify your earning potential and opportunities. Unlike other investments, this kind of growth is entirely under your control. You decide how much effort, time, and focus to put in, and the returns can be life-changing. In short, while stocks and real estate are excellent tools, the foundation of real wealth always starts with you. Every dollar, hour, or effort you invest in improving yourself multiplies over time, providing not just money, but freedom, choice, and resilience. The more you grow, the more value you can create and the more wealth you can build. Investing in yourself is the smartest investment you will ever make. Investment because it pays dividends for the rest of your life. One of the biggest mistakes people make when trying to build wealth is chasing hype. It's easy to get caught up in the excitement of the latest trend. Cryptocurrencies, NFTs, meme stocks, or hot startup investments. Everyone seems to be making money, and you don't want to miss out, right? That's the exact trap that keeps most people from building real, lasting wealth. These high-risk, speculative investments might offer quick thrills, but they rarely provide reliable, long-term financial security. In fact, for every person who strikes it big, dozens lose everything they invested. The problem is that these investments rely more on timing, luck, and market sentiment than on fundamentals. Investment. People buy at the peak because they're afraid of missing out, only to panic sell when the market turns. The cycle of hype and disappointment can be emotionally exhausting, and it's a strategy that doesn't reward patience or discipline. True wealth is not about chasing short-term gains. It's about building assets that grow steadily over time. Stocks, real estate, and self-investment are proven methods that work regardless of market noise. Another critical factor is understanding risk. Speculative investments often look enticing because of stories of overnight millionaires, but these stories are exceptions, not the rule. Most people don't have the knowledge, timing, or risk tolerance to succeed in these volatile markets. Without a solid foundation and a strategy based on fundamentals, investment, you're essentially gambling with your future. It's easy to get swept up in the hype, but the reality is that wealth comes from consistent, calculated actions, not from chasing trends or trying to beat the market. Chasing hype also diverts your attention and resources from the investments that actually build wealth. Time, energy, and money spent worrying about the next hot stock or cryptocurrency could be better used buying rental properties, investing in dividend-paying stocks, or developing skills that increase your income. The opportunity cost of distraction is enormous. Every dollar an hour you spend chasing fads is a dollar an hour not working for you in a strategy that actually compounds over time. Discipline and patience are the antidotes to hype. Wealth isn't built overnight. It's built by making smart choices consistently over years and decades. Investment. By avoiding speculative investments and focusing on proven methods, you remove the emotional roller coaster from your financial life. You create a steady, predictable path toward financial freedom where your money grows, compounds, and works for you. Finally, avoiding hype also means you retain control over your wealth. You're not at the mercy of social media trends, market influencers, or sudden crashes. You're following a plan based on fundamentals, research, and proven strategies. That control and peace of mind are invaluable because wealth is not just about numbers on a balance sheet. It's about security, freedom, and the ability to make decisions without fear. In short, the key to building real wealth is ignoring the hype. Focus on what works, stick to disciplined strategies, and be patient. Over time, your consistent actions will compound, while the people chasing trends will either give up or start over. Real wealth is earned through focus, discipline, and long-term thinking, not through the thrill of the next hot investment.